By the end of this video, you won't just know definitions, you will understand the flow, who creates what, when, and why. Watch closely because once the flow clicks, everything else becomes easier. Most people entering business, freelancing or accounting see PO, SO, and voucher and assume they are interchangeable. They are not. Each document exists for a specific moment in a transaction, and mixing them up causes confusion in billing, recording, and reporting. Pass and comment. Which one confuses you the most? These documents are not paperwork for the sake of paperwork. They exist to reduce misunderstandings between buyers and sellers and to create a traceable history of what was requested, approved, delivered, and paid. Whether you are a freelancer invoicing client, a small business owner buying supplies, or a student learning accounting basics, this flow helps you understand how real businesses operate, not just textbook theory. Question: what happens if payment is made without proof of approval? Before diving into each document, lock this into your mind. These documents follow time. They don't exist together. They appear one after another as the transaction progresses. In the next slice, we will zoom into each one individually. Don't skip ahead. Missing one step breaks the entire understanding. A purchase order or PO is created before anything is sold. It's buyer saying, "This is what I want at this price under these terms." Internally, it often represents approval to spend money. Think of it as a controlled request, not a payment and not a sale yet. Who creates the PO? Buyer or seller? Question. Comment in the comment box. Purchase orders are common where spending needs approval. Companies don't want random purchases without recourse. A PO ensures the request is authorized before money leaves the business. Freelancers may not use POs daily, but understanding them helps when working with the structured clients. A sales order or SO is the seller's confirmation. It says, "Yes, we accept your request and will deliver under these terms." This is where the transaction becomes operational. No SO means no formal commitment from the seller. Question: what if terms don't match the PO? We will cover that soon. This comparison is where most learners get clarity. The PO starts the conversation, the SO confirms it. They should match. Mismatches lead to disputes. If you remember only one thing, PO asks, SO answers. A payment voucher is not sent to the seller, it stays inside the business. It records why money was paid and how it was paid and which documents support it. This is critical for tracking and verification. Every payment needs a reason. The voucher links the payment to documents like invoices, purchase orders, or approvals. Without it, payments become hard to explain later. What happens if someone asks, "Why was this paid?" Answer in comment box. Imagine a small business ordering services. The PO requests work. The SO confirms acceptance. The service is delivered. The payment voucher records the payment. This sequence creates clarity, control, and traceability. Most problems most problems happen when steps are skipped. Paying without records or confirming without approval creates confusion later. Clean documentation saves time and reduces stress. This is your takeaway. Shortcut. If you remember these three words, you will always know where each document fits. Simple system scales better than complex ones. This flow shows how a typical business transaction moves step by step from request to payment. It starts with a PO, which is created by the buyer to formally request goods or services and confirm internal approval. The seller then issues SO to acknowledge and accept that request under agreed terms. After the goods or services are delivered, an invoice is issued to request payment and outline what is due. Finally, when the payment is made, a payment voucher is created internally to record and document the payment for tracking and verification purposes. Together, these steps create a clear, traceable workflow from intention to settlement. Different roles are different roles use different parts of the flow, but understanding all three gives you confidence across roles and industries. This is foundational knowledge. Pause the video and answer these questions mentally. If you can answer all these questions, you have got the concept. Who creates PO? What confirms acceptance? What records payment? Understanding the flow turns confusion into clarity. These documents are tools, not obstacles. In future videos, I will go in depth with these PO, SO, and voucher. Stay tuned. If you found this helpful, please like the video, subscribe to the channel, and share it with your friends. Thank you very much.